Hi everyone, I hope you're well. I'm just doing a quick little video to catch up, stay in touch, and it is prompted following our investment committee meeting from the end of the week before last. So I thought I'd condense down some of the things we talked about as quickly as possible, concisely as possible, but invite you, of course, as always, to give me a call or an email if you want some further information or conversation about it. I think probably the quickest summary, and I know we've had, since that investment committee meeting, we've had the commencement of the Middle Eastern war as well, the Iran-US thing, and so I'll mention that specifically in just a tick. But of course, prior to starting as well, I need to mention that this is a general information video. It talks about things in general and how they might affect markets and people individually, but of course that varies. So any queries that relate to you specifically should be addressed to me directly, no problem. Really just quickly, following on from our meeting and our reassessment of where the world sits prior really to the commencement of this Middle Eastern war, but knowing that it was on the cards anyway, I guess the summary would be that we've seen global markets remain fairly strong despite a lot of volatility up till this point, and patchiness of instability. The growth has still been quite solid. So what I think we can see is that despite the geopolitical risks, these two factors of really strong, robust corporate profitability, broadly speaking, across the world is providing good support for investment markets, but also that sort of helpful, supportive fiscal policy framework where banks particularly are providing support for confidence in growth, and which leads on to the company profitability we just talked about. So interestingly too, and you hear about it all the time, but this AI theme that's coming through, while it's a broad comment that means different things in different scenarios and is applied differently, and goes from all sorts of specific things that you hear about being, disingenuously used to a really good basic tool where it plows through large amounts of basic work and therefore provides greater efficiency for companies. Because that is an emerging theme, there's a lot of investment, a lot of capital investment in it, and that's also providing good support for markets. So those two things, company profitability and this capital injection into companies, is providing support for markets, which might explain why they're going along pretty strongly, despite the fact that the world might seem like it's pretty shaky. Naturally, there's always risks on the other side of it, one of which is AI itself again, in that it will, as it has over time, we've seen that where new technologies come along and they're disastrous for some sectors and some markets, some companies. So we'll see that happen, and that of course is a risk to individual investments in some cases. But also the geopolitical risks continue, and they don't seem to be getting any more predictable. So they have led to what we've seen with that war, particularly in the last week or so, and its knock-on effects, which include oil shortages and other things that will probably add to inflation. We're seeing it. How long it lasts is another question. So they're the sort of impending risks that we see. Speaking of the war, I sent out, if you haven't had a chance to have a look at it, completely understandable, but late last week I sent out I beg your pardon, late the week before, I think I sent out a note about a report from our research analyst Quilla, and if nothing else, there's a sentence in there that I think is helpful when we're looking at all the stuff on the news about this war and the impact, and naturally all the negatives are very easy to see. There's a summary paragraph in that which includes the sentence that says military related pricing moves, especially where the US military has superiority, typically reverse once the conflict's scope is defined, and this results in sharp but short-lived market disruption. So while the news yesterday was all about, of course, the heavy slides in the market, including here in Australia, we dropped over 3%. Overnight in the US, we saw the two markets, I think the Dow Jones rose just under 1% and the Nasdaq rose about 1.4%. So you see those immediate reactions. And today, when I looked just before starting this video, our Australian shares had rebounded by about 1.4% as well. So heightened volatility means these really sharp day-to-day reactions, and we'll see it, and it sort of reinforces that really boring but solid old point about riding through volatility and making sure we're not forced to sell at the wrong time. Things I always usually end up saying in these videos. All that said, in summary, our view, and you might recall me talking in other videos about placing scenarios. We can never be 100% sure of anything, of course, but certain outcomes are more likely than others, and we have that really pessimistic view now sitting at about 10% only, which is good, and the combined two scenarios that would be considered more positive make up the remaining 90%. But of those two, the vast majority, or the vast most likely scenario we see at more than 50% likely is that middle scenario, which is the kind of what do we call it, the below trend growth muddling along scenario, where growth is uneven in different areas around the world. Some places will do better than others. Inflation being a stubborn guest, you know, and that causing risks, and also potentially subdued growth. So we're looking at this growth but at a slower pace, below trend growth scenario, and that's kind of one of these scenarios we face. It can be subject to change and will remain adaptable as far as investments go. But other than that, we don't see it as being terribly pessimistic, despite some of the awful things that are happening in the world. The markets tend to march on with short-term ups and downs depending. So look, that's probably the quickest summary I can do. I hope it was useful and clear enough. And of course, always welcome and encourage conversations and calls if you have queries. I don't want you to sit there wondering or worrying about something. We could easily chat out. Other than that, hope you're well, and we'll talk again soon. Thanks. Bye-bye.